and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here at ausbiz. So let's check what happened overnight. Global equity markets turning negative, while bond yields and US dollar rose further as investors considered less aggressive US rate cuts. Stocks on Wall Street finishing sharply lower. The mega cap growth stocks dragged on the broader indices, with both Nvidia and Apple tumbling. Tesla reported after the bell with a higher than expected profit margin for the third quarter, almost 20%, even as it offered lucrative discounts to boost demand for its aging EV lineup, while it says it expects to achieve slight growth in vehicle deliveries this year. McDonald's slumped after an E. coli infection linked to its quarter-pounder hamburgers killed one person and left many hospitalised. Coke fell after the company reiterated its annual profit growth forecast despite expecting higher revenue. Starbucks fell sharply before the opening bell, but then pared those losses after the coffee shop chain suspended its annual forecast. Boeing dropped after the aircraft manufacturer reported a quarterly loss of $6 billion owing to a crippling strike, with factory workers expected to vote on a new contract proposal that could end that standoff after 5 weeks. And AT&T shares rose as its adjusted profit beat estimates as it gained more wireless subscribers than expected in the third quarter. Well, the Federal Reserve's Beige Book showed US economic activity was little changed from September through to October, reflecting a moderately expanding economy with some deceleration in prices and an uptick in hiring. Growing uncertainty about the presidential election and the likelihood of a less dovish Federal Reserve due to the strong economy has seen the yield on the 10-year Treasury note rise to 4.24%, the 2-year up to 4.08%. And the Bank of Canada cut its overnight target rate by 50 basis points to 3.75%. That was widely expected. Meanwhile, Goldman Sachs has said that the euro could fall by as much as 10% in a scenario under which a Trump presidency ushered in hefty tariffs and tax cuts. Betting site Polymarket shows a 64% chance of Trump winning the election and a 36% probability of a Harris victory. The Aussie dollar is currently at 66.3 US cents. In terms of commodities overnight, oil prices have fallen after data showed US crude inventories rose by more than expected. Brent futures settling close to $75 a barrel. Copper's down around 1%. Iron ore dropped more than 2 to 98 US dollars a tonne. And the gold's record run has ended for now, with the precious metal falling around 1% to $2,715 an ounce. And Bitcoin down to around 66,500 US dollars. So let's get across what's moving those markets. Ira Epstein joining us from Linn Associates. Ira, very good to catch up with you again. It's all about those bond yields at the moment. What is going on there?
Election, fear of deficits, things of that nature going on. Whenever you get to an election, everything surfaces. I mean, that is the idea. The mudslinging goes on. Who's spending too much money? What's going to change? Dictator in Trump. I'm surprised that they didn't blame ex-President Trump for the McDonald's E. coli breakout, because the day before he was handing out at one of the McDonald's all the bags and putting fries in and the like. So, that's what you get. But when you look at what's going on, this is so typical. I mean, I go back sometimes 100 years on seasonal charts, and I look to see what the market does pre-election. I'm talking the general markets here, what they do going in, how the markets react right after the post-election, and then what you do going into year end. And if things hold as they should, we're down this week. We should come railing back. We probably then go back up towards the election. You fuddle around there. You get whoever's going to win. You go up, down. But then, Andrew, what I'm looking for is more of a rally, and that, as I call it, Santa Powell rally. I don't think, unfortunately, we're going to get the rate cut in November. I'm in the camp at this point that doesn't think we need it. I'll lean to the December. I am in the minority, so let's make that very clear. But I need to see data that says that the Fed should not pause. That's different than saying all the reasons are there for them to give a cut. As for the metals, whoa, on this show, I've been extremely right. Silver exploded to the $35 level we were talking about. The gold market has taken off into the 2,700 zone. And now, just like you get in front of the election, some profit taking place. And this is a highly volatile period. Today was the day that I told my subscribers to come out of the SLV. They had bought it just when I was on with you last week. We came out just this morning, and I am looking to buy back on the brakes, but let the market back off a little bit here. Let it consolidate a touch of this gain. It's been too much one way.
Ira, I've asked you this before, whether the outcome of the election does in fact matter for markets. And well, then of course you look at the latest betting, although someone did remind me stateside that a lot of these polls are driven by Republicans. Nonetheless, they seem to be favouring Donald Trump at the moment. Does that outcome matter for markets then?
Actually, in the States, Andrew, living here, and I get the polls across my desk literally as they come out. Harris is leading Donald. The betting polls are one thing, but the polls being conducted by the large TV stations, the large newspapers, other areas, actually, she's got a minor lead. Now, whether that holds up or not, I don't know. Does it really matter? Well, in the scheme of things, what's your time frame? That's the way you have to ask me the question. If you ask me there's a question on the night of it, whoever wins, you're going to get radical moves in the market. It doesn't matter. I don't know that it'll matter all that much going into year end. What you want to see is not only who wins the presidency, but what happens in Congress. As long as we have a split, which means you don't have the Democrats having a sweep or the Republicans, then you have control over who's going to be into the House. The market seemed to think, as you saw Goldman say, that Trump, if he gets in again, will be more of a dictator, will come back with all the tariffs, the dollar will roar, so to speak. The other school of thought is that Harris is out of her element, not strong enough to be a president with wars breaking out around the world, has no experience in what she's doing. I can go on and on. Again, she hid for 4 years. She did a terrible job as a vice president on our border. Anyone that's trying to pick up why she should be president is purely because she's not Trump. Beyond that, I don't know what she's done. And forget my politics, because I'm apolitical when it comes to the market. I just don't know what she's capable of.
So, Ira, then let's look at what we're seeing on the equity market at the moment. Of course, we are in the midst of earnings season. What are your takeouts there? Interesting, that result we saw from Tesla.
Tesla today, so interesting as can be. This is so typical. Number one, they're going to deliver more cars. So that is the positive. Whether we get the cars on time that he's talking about or the price that he'll get, whatever. You just don't bet against this man long term. However, let's understand this stock was a $500, $450 stock, more than that. And you're in the twos. So he's not infallible. At the end of the day, I'm not convinced I understand what Tesla is. Is it an auto company? Is it a tech company? I'd like to see the companies all split off so there's better ways to invest in them. I want to own anything to do with Starlink. I think it's phenomenal for the whole world. I'm not saying it's what you use in a big city where we got fiber optics and cable and so on, but in the country, you absolutely want to have that. I have a son that's a forest ranger. In California. What do you think he uses? He uses Starlink. So I know how that goes. So I'm looking at what the market's doing. I think if you're looking to say, here's what it's going to do because of the election, I did that. I just did a huge report that comes off today, Wednesday in the States. So maybe he has another 6 hours on our website on the US dollar and what it does. And I can only tell you from the time I put the report out just last Friday, the market has done exactly what it should be doing. There's a move ahead and then a back off, and then you'll see what it does the rest of the time. But that again, I went back and looked at the seasonals. And when markets don't pay attention to seasonals, very important, that means something else. Give you an example. We should have broken in the stock indices on a seasonal basis in September. You didn't. Does that mean the market's probably got more fuel going into year end when you typically rally? I happen to think that's the case.
All right, and with that US dollar strength, of course, we've also seen that strength, as you mentioned, in gold and silver. That inverse correlation has broken, but where are you seeing those precious metals go from now then?
What the precious metals are doing, and let's understand what a precious metal is. It's gold. It could be platinum. It is not silver. All right. I don't know how you say that an item that costs $30 is precious. I just can't get with that. But I understand the gold. Don't get me wrong. I think silver's got power in it. So what I think is the market is understanding that the U.S. is going to be a strong economy. The market so far is shaking everything off that we thought was weak. That's why I'm not in the camp at this point that we need another rate cut come November 7th. However, I do think you'll need them. I just think it's taking more time and the Fed will get ahead of it. On a relative basis, there's no economy as strong as ours is holding up. And that's what you're seeing across the world. IMF just did its growth. But we have debt that's out of control, and neither Harris nor Trump will resolve that. And because of that, you want to own gold in markets like that because they understand that, and that's where traders are running. The fact that interest rates have soared since the Fed cut interest rates. You heard what I said. The day before the Fed cut interest rates, we are higher than after the 50 basis point move on the 10-year notes. And yet the gold moved. Why? Because the market's understanding that we're getting into a big hole here of debt, and the market's anticipating that whoever gets in, more debt's going to be coming very quickly. Which one could be the worst case? That's basically all you're looking at.
All right. Good to catch up again. Thanks for joining us from Linn Associates.
Thanks for having me.
Check of the local market. We are expecting to follow its global peers lower. As you can see, SPY futures off around 1/5%. Stay with us because the open is a couple of minutes away.